All right, President Donald Trump is going to be nominate Kevin Walsh to be the next Federal Reserve Chair, who is going to be replacing Joel Paul. Amen. So, how this is going to affect the Bitcoin, stock, and gold, and other high currency we have in the world. So, before I go fully deep into about this topic, I will have to bring out the little background about Kevin Walsh, how he became one of the most big politician when it comes of the financial system in the United States of America. So let's go deeply to the background of Kevin Walsh. Kevin Walsh is an American economist, banker, and a former government official who has played an important role in the United financial policy and the central banking. Kevin Walsh is a U.S. financier and a former Federal Reserve official who served as a member of the Federal Reserve Board of the Governor from 2006 to 2011. During that time, he helped guide the U.S. Central Bank through the 2008 global financial crisis, working closely with the policymaker and the major Wall Street institution. He became notable for being one of the youngest people ever appointed in the Federal Reserve, joining the board at the age of 35. During the financial crisis, Walsh acted as a bridge between the Federal Reserve and a major financial institute, helping coordinating Federal Reserve and the former financial institute respond to stabilize the banking system and a global market. He also represents the Fed in the international forum like the G20, discussing global economic stability. Recently, Donald Trump nominated Kevin Walsh to become the next chair of the Federal Reserve, replacing Joe Paul. If confirmed by the US Senate, he will lead the central bank responsible for setting interest rates and managing the US monetary policy.
Are you on board with Bitcoin? I know Stan Druckenmiller is now on board. I think when we've talked about Bitcoin in the past, I think you had perhaps a lesser view. I don't know if you have a different view today.
Stan calls me his partner. I call him my boss. One of us is lying, but I'll let you figure out who's who in that, Andrew. I'd say I think that Bitcoin does make sense as part of a portfolio in this environment where you have the most fundamental shift, for example, in monetary policy since Paul Volcker. This is a big shift that we're seeing under the Powell Fed, rightly or wrongly. So I'm not surprised in a period of dollar weakness where Bitcoin's doing what it's doing. And I'd also suggest that part of the move in Bitcoin is taking some of the bid away from gold. I think if Bitcoin never existed, gold would be rallying even more right now. But I guess if you're under 40, Bitcoin is your new gold. So I think of Bitcoin as a lot of things, but it's certainly with every passing day getting new life as an alternative currency. And when you see the strength of the euro, the strength of the pound, the strength of the RMB, the Korean won, the Mexican peso, I guess we shouldn't be surprised to see the strength of Bitcoin as well.
The global financial market could be entering a major turning point in 2026, and much of that attention is centering on the leadership of the Federal Reserve. The Federal Reserve, often simply called the Fed, play one of the most powerful roles in the global economy because it controls interest rates, the supply of money, and the overall flow of liquidity in the financial system. When the Fed changed its policy, the effects are felt not just in the United States but across the entire world. Stock, cryptocurrency like Bitcoin, and traditional safe haven assets like gold all respond to this decision. In 2026, investors are watching closely because the leadership of the Fed may change. A new Federal Reserve chair could bring a different approach to the interest rates and the economy policy, and even small shift in the policy can have massive effect on the financial market. Over the past few years, markets have been extremely sensitive to the interest rate change. When interest rates rise, borrowing becomes more expensive. Companies slow down their investment and investors tend to move their money into safer assets. But when interest rates fall, money becomes cheaper to borrow because expand more easily, and investors often move into riskier assets such as stock and cryptocurrency in search of higher return. This is why the possibility of a new Fed chair has sparked so much debate. Many analysts believe that the next leadership could eventually move toward lower interest rates if economy grows slow or if inflation begins to stabilize. Lower rates usually mean more liquidity flowing into the financial system, and historically, that kind of environment has been very supportive for stock market when companies can borrow money at cheaper costs. They tend to grow faster, invest more, and increase their earning. Investors often respond to this by buying more shares, which push stock price higher. Bitcoin and the broader currency market are also highly sensitive to liquidity conditions. Unlike traditional currency, Bitcoin is often seen as both a speculative asset and a potential hedge against currency. During periods when central banks inject large amounts of liquidity into the economy, cryptocurrencies have historically experienced strong rally. This is because investors with more availability capital tend to explore alternative assets with higher growth potential. However, Bitcoin can also be extremely volatile, and if the Fed keep interest rates high or tighten financial conditions, cryptocurrency can quickly lose momentum. Gold, on the other hand, behave differently for both stock and cryptocurrency. For centuries, gold has been viewed as a store of value and a safe haven during times of economic uncertainty. Gold tends to perform when inflation rises or when investors lose confidence in traditional currency. If the Fed Reserve leadership adopt policy that lead to a higher inflation or a weaker US dollar, gold could benefit significantly. On the other hand, if interest rates remain high, gold can sometimes struggle because investors may prefer assets that provide income, such as bonds. What makes 2026 particularly interesting is that the global economy is already balancing several powerful forces at the same time. Inflation, pressure, geopolitical tension, government debt level, and technological growth are influencing the direction of the financial market. The decision made by the Federal Reserve will interact with the force and could shape the investment landscape for years to come. For investors, the key question is not simply who will become the next Federal Reserve chairman, but how that leadership will respond to the challenges of the modern economy. If policies shift toward easier financial conditions, we could see strong momentum in stocks and cryptocurrency. If inflation remains stubbornly high and the Fed is forced to keep rates elevated, markets could face periods of volatility. Meanwhile, gold may continue to attract attention as a protective asset in uncertain times. In the end, the leadership of the Federal Reserve does not just influence American markets, it influences the entire global financial system. The direction taken in 2026 could play a major role in determining whether the coming years favor growth assets like stock and Bitcoin or defensive assets like gold. For investors around the world, watching the signal from the Federal Reserve will remain one of the most important factors in understanding where markets may head next. Please, if this is your first time watching this video, please you can hit up the subscribe button, like and share this video for more videos like this to come in the future. Peace out.